Hey everyone, thank you so much for joining Archangel Alts. And here we are, we're going to continue with our lesson plan. So this is pretty exciting. So as I teach on this, I'm going to just kind of let Bitcoin run in the background. Who says we don't have any graphics? Here they are. So the only thing I really need to use for this to discuss this with you is to use the handy calculator while we're doing this. So I don't know why I always like to slide it over there, but there it is. So two of the main concepts that we'll want everybody to understand, something that I really labored over and worked and reworked, and it's something that we've kind of held close to the chest for a long time. We actually had a non-disclosure at one point. So it kind of is, it's very meaningful for me to actually share this with you as we go on the trading journey together. And I'm sure as we get to know, the actual members of the community better and better, it's going to be exciting to kind of share notes and work and rework the process. So the two main concepts here, and they tie into everything else that you're going to learn within our training system, developing systems and processes in order to work. The first one is the rule of fifths, and the second one is the principle of thirds. So this video is just your basic introduction into what is the rule of fifths. This is our own proprietary concept. Obviously, dealing with something everybody will deal with is, how much should I spend? What is my budgeting? What is the cost of things? And it's directly correlated to what your output is going to be. So the rule of fifths, to keep things just at the forefront, rule of fifths, you deal with your budgeting. Principle of thirds is something that deals with the actual trading side of things. Looking for the right positions is a lot more, it's about a lot more than just looking at the charts and learning the indicators. And I'm noticing that a lot of people don't teach on anything in the nuance or the pulse or the patterns that I think really matter, that kind of, whether somebody just happens to have an instinct for something or whether they need such a system to go by, that, is kind of, it's just hard to explain what it's like to feel, the right pace of a position. But the principle of thirds is a way to understand why I do some of the things that I do and why those seem to be working so well. So in this rule of fifths, what we're trying to do on the simplest of terms is establish what kind of budget we're going to work with and what that breaks down into. And what I would like to say, just as an overarching thing, don't create a budget out of something that you cannot afford to lose. You might want to test things and then retest them before creating the actual system. So you can learn this over time, but maybe not a really long time, because this market may not be as free and easy to enjoy, this kind of once in a lifetime opportunity, once in many generations opportunity, I think. Because we have basically a secret growing stock market that most people aren't aware of and aren't taking seriously, that hasn't become completely monopolized and capitalized by, the giants of other industries. So we are so fortunate to have this opportunity, to have this option even to trade. Come join the Binance Exchange, figure out your budget and load it into Bitcoin and get it rolling. And I would also suggest that if you do have extra income, you have something that you can budget out and miss a few, pizza nights or a few extra, fancy dinners, a few times out to the movies, that it is very smart once a week, twice a week, once a month, if you are able to inject, $100, $200, $500, $1,000, whatever scales to what you're looking to do. To add to the process is always smart, and unless you are not holding up the percentage and you're kind of cheating yourself or lying to yourself about whether you're doing well. Don't keep pouring money into positions that are losing. Make sure that you're staying on track. But it does help to accelerate a process that is likely to take a couple of years. If you can get it down to 1 year or even 9 or 10 months, my goodness, the payoff is phenomenal. So with the rule of fifths, what we want to look at is, first of all, the minimum trade size and how many trades we're trying to continue to trade. And we want to account for the huddles that are going to happen along the way. And that's basically it. So one of the things that I think that people do wrong, they get wrong when it comes to this, and therefore you're going to get frustrated by hearing the question over and over. But everybody's focused on the principal. Let's say you have $100,000 that you're going to invest in something. So your principal is $100,000, and then there's some fees, and it dwindles a little bit, and then you put it across mutual funds, and then they go up and down, and they go up and down, and sometimes you're at 98, and sometimes you're at 107, and over time you're hoping that you'll get that 12% over 15 to 30 years. Understandable. So somebody can say, what's your principal and how much are we up, right? In this case, we're looking at the overall budget, your overall stack, your entire principal. We're looking at that as circulation. We are looking at the money that you have to invest in this as the resource that you have in order to allow the process to work. The rule of fifths is going to break down the actual active moving budget, and so your primary trade size is actually going to be what you think of as your principal. And so we're growing the principal by whatever we can afford to try to grow it by, and we're going to lengthen or prolong the amount of time that we can keep growing it by using the rule of fifths. So let all that absorb, and first thing I'm going to mention is that eventually you want to kind of translate or interpret for yourself the way that you think about money out of fiat and into Bitcoin. Bitcoin right now is at 3,800. We've done this while it was at 6,500 for a long time, and $8,000 before that. We've been there when it was 10 grand. It's been worth a lot of different things. I want you to pretend that Bitcoin is always worth $10,000, or the tens unit of whatever your fiat currency is. Okay, so this is a Bitcoin that's in the 10,000s position, and it has 8 zeros after it. Satoshi was a very smart guy. So the reason we want to do this is I want you to think in terms of not what is it worth in a dollar, but what is everything else worth in Bitcoin. You're trading everything into Bitcoin now, right? Back and forth and back and forth. That's your market, whatever coins are trading against Bitcoin. 10,000. 0.1 is our 1,000s, okay? So you might have up to 0.99999. That's almost 10,000. Once it reaches there, it becomes 1 Bitcoin. 1,000s, 100s, tens, dollars, pennies, pennies, fractions of pennies, fractions of fractions of pennies. Okay? It's not about attaching the fiat value, because we're going to be locked into Bitcoin until we have doubled and doubled and doubled and doubled and doubled. That's the goal, okay? So in order to do that, we need to measure it by something. So we're wanting to establish what our minimum trade is. Now, if this was completely scalable on this exchange, then you could literally, you could start with $100 and you could do 20-cent trades all day long and do whatever you want. But unfortunately, there is a floor. So you can't go smaller than a trade of 0.001. Okay, so in our Bitcoin world, that means $10. Okay, just think of this as $10. The problem there too is that, first of all, you have to pay fees, and if you don't have any BNB or Binance's coin to help you pay fees with, then that's going to come out of part of your trade. So let's say that you really only had enough to do $10 trades. That's not enough. That's not going to be enough, because some coins, first of all, it's going to take some of that out in order to pay the fee. And if you did, let's say, earn 10 cents on your incredibly small trade, which that would be really, really good if you could put in 10 and make 10 cents. Unfortunately, when you go to sell, you're going to have less than you started with, because it's not enough to pay the fees again. So you really don't want to go as low as this. We've just, over time, over experience, we've said that, this is the minimum trade. $20 in Bitcoin world is our minimum trade, okay? You can get, I think, some at 0.0018 and pay for the fees and still make your profit, et cetera, et cetera. But it's really just, it's better to establish a baseline here at $20. Don't do anything smaller. And your exponential growth is going to be really kind of painful if you are starting off as small as 20. If you're really thinking in terms of, wow, I'm going to make $1 million off of Bitcoin. Yeah, that's a really tough job if you're going to stay here without accelerating the process somehow. So the rule of fifths, we're going to establish our trade size. That's our first level, okay? there's 3 different levels that we're looking at with the rule of fifths. The first one is to establish a trade. So we're going to say we're doing $20 trades. Okay, just the bare minimum. I'm going to explain by the rule of fifths that I would not try to do this lengthy, arduous, just blood, sweat, and tears, tedious process that can also be really, really fun and exciting, but often takes a lot of work and a lot of time and a lot of patience and a lot of learning. That's what we're here for. I would not do this without having $2,500 at least that you can make it through the whole process. That doesn't mean that you can't take $200, $300, $500 and enjoy learning, enjoy testing different things, mulling over things in your mind. And if you're really good, you might get there. You might establish your own budget. Hey, wouldn't that be the perfect way to do it? We kind of almost did that ourselves when we were starting to work this process. So, this is something that, oh my gosh, I have labored over this and tested it so many different ways. This is the way to do it. I promise you, this is the smart way to do it. The only issue is that if you find that despite trying to follow what we do and despite trying to find good positions of your own and establish, try to do things on your own by learning from us, if you're just not getting, beyond 80%, 85% accuracy, using all of the methods that we're doing, honestly, I think that I would not recommend trying to go into bigger and bigger money. You might do best to allow yourself to treat this as a really important hobby and wait some of those holds out, or even figure out which ones are a small enough loss that you can add that money back into your circulation and keep testing and practicing. Not everybody is going to be good at this. It's kind of, like if I were trying to teach you to play piano, I might know some really good things about finger exercises and how to play chords and stuff and scales, but not everybody is necessarily going to be great at piano. So $2,500 budget, how do we get there in the rule of fifths? So our trade size is $20. The first layer of 5, okay, is there to allow you to continue your circulation, okay? So you have 5 opportunities to get into a position and out of a position. You want to always be circulating those 5. And if you did so perfectly and you never ran out of time and you wanted to stay on your daily average of trying to grow by, let's say, 2% or 3% max, and if you do better than that, then fantastic. You're just checking off more intervals as you go along. But so your single trade at its first level is 1/5 of whatever you've established this is in your rule of fifths, okay? There's a second layer. Whatever that amount is, you want to multiply that by 5. So what does that actually give you? You have 5 at 100 times 5. You have 25 trades available to you at $20, okay? For $500. Let's say you had 50, this would only allow you 10 trades. Okay, so $20, 2, 4, 6, 8, 10 is 5. That's 100. 5, 10, 15, 20, 25 trades, okay? The reason for this second level in our rule of fifths is that as you're circulating your trades, we're wanting to extend the length of time that you can continue doing that in order to have your entire first cycle for whatever interval you're working on to be free, and that within the next cycle, the next interval or day, after you've reached 2% or 3%, whatever your goal is, and whatever your accuracy level is, that you still have enough trades to keep going. And so as you do your second cycle and you've got 5 trades and you're recirculating those and you're trying to reach your interval goal, some of those along the way are going to get stuck in positions. You're going to be wrong about something not clearing within an hour or 2 hours or half a day or several days or a week. But you've assessed everything. You've followed our process. You've looked at the averages. You've looked at all of the indicators and what the position says to you, and you feel strong about your huddles. So over time, those are going to accumulate. Let's say that you've done your first 100 trades and you have an accuracy of 80, but you have some of those 20 positions that are sitting longer than others, and some of them take 1 day while you're in another interval and you're on your 5th day. Those things tend to accumulate. So we've done the math behind the scenes to see just what level of accuracy you have to reach in order to maintain forward movement. So Now, the larger that your budget, you can always readjust to a lower amount so that you can continue to trade and continue to take advantage of opportunities that are in the market. But what you don't want to do is to try to stay on target and look for positions that are really not safe or smart to make, just to keep on your scaling. So the first level of the rule of fifths, so there's our 5, is to give us 5 trades at whatever that baseline is to trade. And so while we put in trade number 1, we still have the trade number 2 that's available to do something else. While we have 1 and 2, let's say neither of them have cleared yet, we have 3, number 3 that we can still continue to trade with, etc., etc. Some people would say, oh, I'm putting 50 on this and I'm putting 75 on that, and etc., etc. And then you'll get stuck, and then something's mooning and it's got a dip and you got the perfect place to go in and you don't have the money available to do it. So this makes sure that doesn't happen. You always have 5 to circulate, and what we're basically saying is that you have 5 cycles that those can continue to go while you're waiting on your others to clear, whether it's an hour, a day, a couple of days, etc. And our third layer is essentially the same concept, but that you want to have 5 times that so that you don't have to ever stop growing your intervals as long as your accuracy is staying at a certain level while you're increasing your earnings. You don't want to run out of the number of those $20 trades that you have to work with. So it accounts for your hodls, that you're not just waiting for a duration of time before them to clear, but they really are stuck. A week goes by, 2 weeks go by, a month goes by. You're going to be holding that. You don't want to take a loss that's going deeper and deeper the longer it goes. And you know that the market's correcting. You know that you've chosen a good coin at a good position. The likelihood that it's still around is high. The likelihood that it's going to get back to that position number is high. That's what that third level is for. I guarantee you that you're going to need it at some point. So at 2,500, this gives you, let's say 2,500 divided by 20 gives you a total of 125 positions of your original trade size. So $20, let's just say times, was it 125, I believe? Yep, it's 2,500. So you might ask me, why don't you just say that, whatever your trade size you choose, you need to have 100 of them or 125 or whatever. Those 3 layers, the logic behind them is so incredibly useful and so incredibly practical. I promise you, you'll be thankful. So, yes, you really could, say $30 in fees to get through Coinbase, to get onto Binance, to have a little bit of BNB a coin to keep the fees as cheap as possible. Yeah, you can start off with $100, and you could do your 5 $20 trades, and you can follow along with us, and when one of them clears, you can put it into the next position and keep going. And there's nothing wrong with doing that if you don't have enough to do stuff. But I mean, if you're wanting to do the entire process through your exponential growth, all of these different plans, this all works together, and you're going to see in the more advanced stuff when you subscribe to our paid channel, all of the more advanced lessons for the rule of fifths. They apply to the positions that you choose, the amount that you choose to spend on them, and you're going to measure out your growth based on what you're trying to accomplish. And I'm going to give you just, kind of a food for thought. Let's say that you are trying on your first day, your first interval. You have $20 size trades and you have 5 to work with. And even though you have your $2,500 minus 100 available, you don't want to just go crazy, plotting positions all over the place. You're wanting to think in terms of, I want to put this here, make sure that it looks good, choose the next thing, move on to that, make sure it looks good. You don't really want to go 5 deep without assessing where you are and what the risk level still looks like, and then mentally kind of put things into the hold category, put things into I think it's going to clear in a day category, all this kind of stuff, mental acrobatics. So let's say you're starting with your first trade, and we're hoping to get 0.5% profit. Okay, so for $20, we've got 10 cents. So now we have $20.10. Makes sense. It makes sense. So in order to do 2% off of that in your first interval, you're going to if you want to have the maximum growth, you're now going to take that trade, the original trade, and you've made more than just the fees. You got 10 cents left over. So here's your 0.5%. And now your next trade, you're going to go in. And you've got this. So, whoop-de-doo, you might be saying, we've got a fraction of a penny extra. But I promise, over time, this will really add up for you. So, 10, 20, 30, 40 cents, if I'm doing the math right, would be 10 cents, 0.5%, 1, 0.5%, 2. Yes. So, at the end of your first cycle, you would have $20.40. 40 cents that you created out of the $20 that you have been trading, okay? That's really not bad at all. I mean, I know it sounds very small. Okay, people are saying, where's my 10x, my 100x? I want to put 20 in and get $100. Well, let's say that you've done 20 times 0.5% equals that, and you've done it 1,000 times, okay? 1, 0, 0, 0 equals that plus 20. Okay, well, I mean, do you mind growing your $20 into $120? I would think not. So, and I'm actually going to make sure that I'm testing this right. I don't want to lead you astray. So I'm going to make sure that I have this set up over here for my exponential growth curve. One of my favorite things. These are a few of my favorite things. Okay, yes, that is correct. All right, we should be looking at the right thing here. So I will go back and check and make sure that that's the case when I'm done. So let's say you have $20 and you're looking for 0.5%, and your first day you're just trying to do 4 of them, and instead of just doing your one interval 2% and doing exponential growth, we're going to do it on every single trade. Okay, so you've got a third of a fraction of a penny. Okay, a third of a penny, basically. Whoop-de-doo, I know. So after 40, is it just still a fraction of that? Well, no, it's actually grown on top of itself. So you now have, 40 cents and 1.5 cents more than you thought you had before. As we go along, do this 400 times. You've now grown this trade size to this trade size. And we have 0.04 cents. Now let's look at what that would have been if it was just linear, okay? I know we're going in exponential growth, but this is the rule of fifths, folks. 20 times 0.005 equals this times 400. Okay, so $60 versus 147. Make sure that I did that right. 20 times 0.005 equals that times 400 equals 40 plus our initial 20. You've grown from 20 to 60 or grown from 20 to 147. That's by adding those, a third of a penny when you started. It's so difficult to have the discipline to do this right, but that's the way to do it right. Let me prove to you that that is the growth that we're actually seeing from this. So do exactly the same math, but do it for this. 0.5% equals that times 100 instead of 400. Okay, so that gives us 10 plus 20. So we've earned $30. That's really, really good for 100 trades at $20. So the whole same thing over here has already grown $2.93. So do you see? Exponential growth kicks in $2.93 worth of extra growth on top of what you've earned just for doing exactly the same thing, but holding on to that dime, holding on to that fraction of a dime and the next dime, etc., has grown to an extra $2.93. Now, that is, if I'm not mistaken, more than 10% of your original trade. Remember, we're looking at the trade side as the trade size as the principal, and that's exactly what we're doing. We're growing the principal one trade at a time. Now keep in mind, you don't have just $20. You have 5 of them circulating at any given time so that you don't run out of time while you're putting in trades, right? And at your second level, you have 5 times of those 5 groups of 5. Those 5 groups of your trade size. So that you can do that entire cycle 5 times while you're waiting on temporary things that are hodling to clear. The third level is to make sure that as you extend from interval to interval as you go along, there are going to be some that are not clearing. And so we want to have room to where even if you're doing 90% accuracy, that's 10 out of 100 that could be waiting at some given time. We're accounting for that so that you have time and room to grow, so that you get through you still have something circulating when you're getting through 200 trades. Still have something circulating when you get through 300 trades. You still have something that will clear and something else that'll clear over time. There's going to be long stretches. We have had, weeks under the worst of the market conditions. We have seen weeks go by where a couple of, we don't have a lot of holds, so it's tough to give these examples, but the holds did not clear for several weeks and things were starting to get a little bit thin. And sure enough, by that time, the system continued to work. So this does work over time. The rule of fifths in summary is that there are 3 different layers that you're wanting to calculate what your budget is going to work with. And if you give yourself enough room, even if you have to readjust it, let's say you got stuck in more positions than you wanted to, you're not maybe as good in accuracy as you would like to be, or not yet. If you follow the other things that we're going to train you on, how to choose positions that not only are good for clearing right now, but if you happen to be wrong, you're still in the game and can continue to move until you wait for it to hopefully clear later before you get around to having to decide on losses and that kind of stuff. This will allow you to have your trade size, to know what your trade size is going to be. And to say, I want to always be able to circulate, 2, 3, 4, 5 while I'm waiting on 1 or 2 or 3. And then as that goes into hours and that goes into days, we want to make sure that we can do that over 5 entire intervals worth of time. And even if, 1 from the first 5 and 1 from the second 5, 1 from the second 5 or third 5 are getting stuck along the way, we still can continue earning our intervals, increasing the trade size upwards as we go along and not run out of space. And then finally, once again, over days and days and days and weeks and weeks and weeks, you're going to find that some of those, despite all of the logic in the world and the corrections that Bitcoin does, I'll show you why it does some of the things that it does, that those are going to be huddles. And so you want to be able to continue trading your circulation of 5 and protecting that circulation of 5 2, 3, 4 days at a time. And then that third layer, you want to be able to keep going day after day after day after day. That length of time is going to be based on what your accuracy level is. But eventually those old ones usually clear at a fairly decent percentage themselves. So our accuracy has been maintaining an average higher than what we're actually saying, but 98.7% has been our kind of long time average. We're actually improving that as we go. And our huddles have had about an 80% accuracy. So you got to think that, out of the 1.3%, that is, sometimes less than 1%, out of those, if you're doing hundreds of trades, that can stack up to dozens of trades. 10 trades out of 1,000 is 1%. So, you can imagine it would be logical if you'd done 1,000 trades, you'd be holding 10 of those, huddling. In our case, I think we have about 12 coins, and I've stretched out those positions in case I'm asleep. Some of them will clear, if I, didn't have a scanner set up to let me know what's going on. I sometimes spread them out. So we might have, 40 or 50 positions in one of them, and I, just recently repositioned a lot of things. But it would make sense if you had 200, 300 holding positions while you're growing. So we'll get into the advanced stuff, but I promise this is the theory that you want to follow. So working backwards, let's say that you have a $10,000 investment, 10, 0, 0, 0. So you would divide that by 5 to look at, your first level of fifths. You would divide that by 5 to look at your second level of fifths. And you divide that by 5 to look at your trade size. So we have literally looked at doing things where we started with an $80 trade and gotten it up to a trade size in Bitcoin world, going from 0.008 up to a trade size of 0.47. I did that wrong. Sorry. From 0.008 up to a trade size of 0.47, which in Bitcoin world is $4,700 trades. I have absolutely done larger than that. We've done, Bitcoin trades. And, sometimes you look at whether you're rebalancing your percentages to match what's happening on the market, et cetera, et cetera, et cetera. But overall, the rule of fifths, I promise you, is the way to go. It's just a very smart way to calculate being able to continue doing your day trading and sometimes swing trading and sometimes, bi-weekly moves, depending on how difficult the market actually is. We're going to be knocking off intervals as we go. You'll see how it works according to the exponential growth. And as the trade grows, you'll want to look at sometimes giving yourself a little bit of buffer if you need to increase the budget here and there. Or you can start with a reserve, something really smart to do. Let's say that you have the money to do so. Let's say you've got 50,000 and you look at, this is what would allow it to prolong. I hit the wrong thing. 50,000 divided by 5. This is what would allow you to prolong all of your holds, get through all of the holds. Okay, and then this is what allows you to continue your circulation, and this is going to let you know what your trade size would be. So you might decide, okay, instead of 400, what I'm going to do is take 10,000 of that and set it as my reserve, so that if I run into any problems, I don't have to stop and decrease my trade size and work back up. Instead, you could say out of 50,000, I'm going to use 40,000 with 10,000 in reserve. And so in this case, you would end up with a trade size of 320. So if you work from 320 up and left 10,000 to the side, you would be growing by the proper rate of 2% or 3%, whatever you decide, per interval. So there you go, rule of fifths. Establishing your trade size, establishing your circulation of the trade size, and then the third level to deal with your long-term hodls as you're continuing to grow. And that is the straightforward basic introduction to your rule of fifths. Next, I'm going to show you a introduction into the principle of thirds. So thank you guys for joining. Please let other people know about us. We are working very hard on this, and we just want to be on the journey together with you. So come be a part of the community. And if you're watching this, you should already be part of the community. So let other people know. Hope you're learning this well. Looking forward to any questions that you might have. Excited to see you in the live trading, live without a net. Alrighty. God bless you. Until then, Archangel Alts out.